What if the most powerful weapon on Earth isn't a missile, isn't an army, and doesn't even belong to a country in the traditional sense? What if it's just money, not cash in your pocket, not your paycheck, but a currency so dominant that entire nations rise or fall depending on whether they can get access to it? For over 70 years, that currency has been the US dollar, and quietly, patiently, and very deliberately, China has been preparing for a world where the dollar no longer rules unchallenged. No official declaration, no dramatic announcement, no single moment you can point to and say, yep, that's when the war started. But make no mistake, this is a war. A currency war worth over $3 trillion, fought not with bombs, but with trade deals, debt, sanctions, digital money, and something even more dangerous: dependency. The mystery is simple, but the answer isn't. If the dollar is so powerful, why is the country holding the most US dollars also the country most eager to escape them? And if China really wants to challenge the dollar, why hasn't it pulled the trigger already? To understand that, we have to rewind, not years, but centuries, to how money stopped being just money. It became power. Before money was global, power was local. Empires rose on land, labor, and violence. Gold and silver mattered, but they moved slowly. Trade was limited. Wars were expensive and obvious. Then came modern finance. In the early 20th century, global trade exploded, but it created a problem. Every country had its own money. Every trade deal involved exchange risk. Every war drained gold reserves. World War II didn't just destroy cities, it destroyed trust in currencies. Europe was broke. Asia was wrecked. Gold was scarce. Everyone needed a system that wouldn't collapse every time a crisis hit. That's when the US stepped in. It's not just with tanks and soldiers, but with a financial blueprint. In 1944, while World War II was still raging, 44 countries met in Bretton Woods, New Hampshire. The mission was simple: never let the world fall apart like this again. The solution they agreed on changed history. The US dollar would be the world's reserve currency. The dollar would be backed by gold. Other currencies would be pegged to the dollar. Institutions like the IMF and World Bank would enforce the rules on paper. This looked fair. In reality, it handed the US something unprecedented: the ability to print the world's money. As long as dollars could be exchanged for gold, everyone trusted them. And since the US held most of the world's gold after World War II, it worked. For a while. The first crack when the dollar broke its promise by the late 1960s. America had a problem. It was fighting. The Vietnam War, the Cold War, massive domestic spending programs, all funded by printing dollars. Foreign countries started noticing something was off. There were more dollars in circulation than gold in US vaults. So they did what any rational actor would do. They asked for their gold. In 1971, President Richard Nixon made a decision that still shapes your life today. He ended dollar-to-gold convertibility. Just like that. No more gold backing. No more hard limit. The dollar became pure trust, and somehow it didn't collapse. Why? Because the US pulled off the greatest financial pivot in history. After ditching gold, the US needed a new anchor. It found it in oil. Through deals with Saudi Arabia and OPEC, oil would be sold only in US dollars in return. The US would provide military protection. This created the petrodollar system. Every country needed dollars to buy energy. Every country had to hold dollar reserves. Every global trade route fed back into US finance. This wasn't just dominance. This was monopoly. And China was watching. For most of the 20th century, China was economically isolated. Then came 1978. Deng Xiaoping opened China to the world. Cheap labor, mass production, export-led growth. Guess what currency global trade used? Dollars. China didn't challenge the system. It plugged into it. By the 1990s and early 2000s, China became the world's factory, the US became the world's consumer. Dollars flowed into China at insane scale. China recycled those dollars by buying US Treasury bonds, slowly, quietly, relentlessly, until one day China realized something terrifying. The $3 trillion trap, when reserves become a weapon by the 2010s. China held over $3 trillion in foreign exchange reserves, mostly in US dollars. On paper, that sounds powerful. In reality, it's a trap. If China dumps dollars, the dollar falls, US assets lose value, and China loses trillions on its own holdings, its mutually assured financial destruction. The US figured this out, and it weaponized it. Breaking point, sanctions, SWIFT, and financial warfare. After 2008, something changed. The US started using the dollar system as a weapon. Iran locked out of SWIFT, Russia's reserves frozen. Sanctions enforced not by armies, but by banks. If you use dollars, you play by our rules. China got the message, and it scared them. Because now dollar dominance wasn't just economic, it was political control. China's countermoves slow, quiet, relentless. China didn't panic, it planned. Gold accumulation, bilateral trade deals, and local currencies. Belt and road loans denominated outside the dollar, creation of SIPs, an alternative to SWIFT, launch of the digital yuan. No single move breaks the dollar, but together, they weaken its grip. China isn't trying to replace the dollar overnight. It's trying to make it optional. Every reserve currency in history eventually fades. Dutch guilder, British pound, Spanish silver. The pattern is always the same. Trade dominance, financialization. Debt explosion, weaponization, loss of trust. The US is somewhere between stage 4 and 5. China knows this. That's why it's playing the long game. What happens if the dollar loses power? This isn't about collapse tomorrow. It's about erosion. Less dollar demand means higher US borrowing costs. Inflation pressure, reduced sanction power, a multipolar financial world for the first time since World War II. The US might not control the rules. Raising interest rates? Temporary? Sanctions? Accelerate alternatives? Trade wars? Push allies away? Every fix creates new problems, because you can't force trust. And currency dominance is built on trust. 3 clear takeaways. 1. The dollar's power comes from habit. Not immortality, it survives because the world still uses it, not because it's flawless. 2. China doesn't want to destroy the dollar. It wants leverage. A weaker dollar system gives China strategic breathing room. 3. Currency wars don't end with explosions. They end with shifts by the time everyone notices. System has already changed. The real question isn't, will the dollar collapse? What happens when the world no longer needs it as much? Because when money stops being unquestioned, power starts getting renegotiated, and that process has already begun. If this video changed how you see money, power, or global politics, hit like, subscribe, and share it with someone who still thinks currency is just numbers. Because the next global conflict won't start with a shot. It'll start with a transaction.